Good morning, everybody. It is 11:40 Thursday, second video of the week. Got a lot to unpack here, some eventful earnings this week, a lot of macro, micro data to go over. A little bit of housekeeping before I dive into this video, which is going to be a little bit longer this time. Um, Over the course of 6 to 8 months, I've been sending these videos via Loom for all my friends and family, really in an effort to help everybody learn and understand how I trade and better help them make money. It appears that over the course of time, people have enjoyed these videos and it has had some trajectory in a positive manner. And I've gained more people that follow these and enjoy them and watch them. And I'm happy to send them out. In an effort to streamline this process, I have set up a YouTube where these videos will be uploaded every week too. So if everybody that has been watching these to my existing viewers, if you guys can just go ahead and subscribe to the videos. I think that's how it works. Click the button, and then in real time, you'll know when the videos are uploaded and you can watch them. And it's the same content I always do and how I created. And for the new people that are now coming on board and learning a little bit about me, I've been doing this for a very long period of time. But really, I set out to make these videos 2 to 3 times a week just to basically enlighten everybody on how I trade and invest in the market. I go about it in that manner. And so hopefully you find some value to these. And if you do, great. Keep watching them, enjoy them. And if you don't, I guess it's not for you. All right, so let's jump into it. As we always do, backdrop of the market. Let's settle in here. The NASDAQ down today, a little bit over 1%. We always start off, we want to jump into that. So kind of touch on, we had yesterday, Jerome Powell spoke. We got a quarter of a basis point rate cut. We hit an all-time high during the day, then came back down. Today we opened up a little bit lower. I mentioned last week we were somewhere around like 7.5% extended over the 50. Usually when the stock market is this much extended over the 50, we do have a little bit of consolidation. You just start to get a little extended, it starts to come down. So that gives you a little bit of the understanding. However, the market kind of had a weird reaction yesterday from the Fed. We expected the rate cuts. However, we did not expect Jerome Powell to say some of the things that he said on the back end of his interview, where he talked about there is no guarantees of rate cuts in December, blah, blah, blah. He's done this forever. We know the correlation to this. We've seen this. He moves the market. So the way we do things is we shift and move to the information and data that's presented to us. We can't predict where the market's going. We do the best we can to use the information we can. However, going on historical precedent, which I like to touch on, last night I did a deep dive into 1999 and 2000 charts. I always like to look at precedent to see kind of where we're going. And man, I have to say, like that 99 chart was actually very similar to this. And it had this move and move and move and move upwards, kind of this slow grind upwards, and then it just went parabolic. I don't have the chart pulled up now, but it went parabolic, and ultimately, I'm sure you all know the story. That was the demise during the dot-com bubble, and it just came right back down. So it is my belief, not necessarily do I know if this is going to happen. I do think we're going to go, I hate to say this, but probably going to go parabolic in the next 2 to 3 months. And we're going to take it from there. As everybody knows, I remain heavily bullish in the short term, and I've been trading as such. Okay, jumping into Bitcoin as well. We always like to touch on Bitcoin. Bitcoin violated the 200 this morning. Definitely not a good sign. I told you guys you need to watch this. Let's see if it makes a lower low. This is not something you want to get in on a trade on right now. I'm looking for the bottom of this wick here. So 106,889 would be the line in the sand, and then really the bottom of this wick would be a bad sign. I do like the converging moving averages, so let's see how this moves. But nothing active right now on a trade. I'm going to go into gold. We always touch on gold. So I mentioned I mentioned on Monday or Tuesday, this bar last week really took it down, and I said the gold short-term trade I think is done. Do I think it's done forever? No, absolutely not. I think the short-term trade is done. However, I'd like to see if it holds this line here, which is the 3901. Obviously that area support at the 50 would serve well. I mean, having that kind of move, you expected some sellers here, elevated volume. I mean, you could pull up the bar here. I mean, these 2 days were massive above average volume. So and in the short term, the trade's done. I do want to see if it bounces up from this area. If it comes back and takes out the 20, I would be interested again in gold. Okay. So now let's jump into stocks and kind of the backdrop of what we have. So there's a lot of data to unpack. First of all, let's talk about economic speaking. I talked about Amazon, which reports today. I talked about Amazon, how they laid off people a couple days ago, and I said that's probably going to bode well for the stock because, I think a lot of people see layoffs in companies and they're like, oh, the stock's going to go down. No, not necessarily. And in most cases, laying people off usually generates a healthy bottom line move, and it lowers cost and whatnot. So a lot of companies have announced layoffs over the last couple days. Never a great sign, to be very honest with you. I don't like that, and I don't like also the way the breadth of the market was 2 days ago, which was terrible. The breadth of the market is the S&P. It was just the large names were holding up the indexes. From a technical standpoint, you never want to see that. So I don't love that. Amazon laid people off. They report today. I'll be watching their earnings closely. Google had an absolute blowout quarter yesterday, up today 14%. I stashed this a while back in my long account. Really, I don't trade this actively, but acknowledging it, this was positive for the overall market. But let's not mistake what's going on. You have layoffs that are being attributed to AI in many aspects. AI is taking jobs, and we're seeing it on the front end, and it will continue happening on the back end. Though I know some of my friends and people want to be like, well, it's the administration, it's the economy. That very well could be, there could be some truth to that, but I'm not seeing it quite yet on the forefront. I'm seeing more so the correlation between artificial intelligence taking positions across the board, and I see it now to the point of my friends, Chipotle, which I watch very closely. I don't trade the stock. I'm just going through this first before we jump into stocks. They got killed yesterday. And I think more concerning for me was the fact that the CEO basically said that since the beginning of the year, and I'm summarizing this, he basically said that the add-on sales were down. So basically people are just coming in, getting their bowls or their burritos, and they're moving on. No more chips, no more this, no more that. Yes, that's a bad indicator. I think he kind of sounded he sounded a little bit absurd. Nonetheless, the stock got killed. I don't trade the stock. I don't own the stock, but I have to pay attention to this because it's the backdrop of the market and we want to know what's going on. All right. We've moved past all that shit. We know the backdrop. We got our Fed cut. The government's still shut down because politicians are fucking idiots. We've got earnings today. We had Google yesterday. Meta, by the way, tanked it up because they're spending so much. They have to continue reinvesting, but Meta's doing terrible today. If you pull it up, I don't even know where it is on the red screen. They're down 11%. Microsoft had a good earnings. They're down 3%. So, irrational behavior. That's okay. The market is typically irrational. All right. So let's jump into some stocks and what we're looking at, what we talked about on Monday so we can make some money because that's the goal. And that's what we want to do. I'll jump into the first one. I got in on Corning. I mentioned this on Tuesday's video. They had earnings after hours on Monday. That day was hit a high. Tuesday it sold off in the morning, and I thought the reason for the sell off made no sense to me. They forward guided strong. Their EPS was great. They're the maker, by the way, for the glass or the iPhone. The iPhone also selling at record speed. So you know what? I mentioned it on Tuesday. I said, why don't we look at that as a trade as long as it could hold the low of the day? It held the low of the day. I took the trade on Tuesday, had a great day yesterday, and now it's up again 1%. I still just think this is an actionable item. Again, it's at all-time high. This volume here, though, right here and here was above average as well. This is an actionable item. I still think you can buy it. I'm in the trade, and I'm in some call options. In fairness, though, I did sell 25% of my options about 10 minutes or right before I started this video. That was just more so profit taking because some of those were short duration, but I still think it's an actionable item. All right, moving right along here. So we've got Amazon. I'm sorry, we've got AMD. AMD reports next week. I want to say Tuesday or Wednesday. So how do you play this report? So I checked the option chain. I saw the volatility. Obviously, most people are betting for the stock to go up. By the option chain, it appears that way. The implied move, I think, was like 6.5%, so to the up or to the downside. More so on the call side. So here's the thing, depending on where you bought this, depending on where you are, here's the all-time high again, 267, which was made yesterday. Today it's consolidating. I mentioned to a couple people, I like this at the 5 if it bounces off the 5. The 5 is 258, slightly below the 5. The question is going to be, is it going to hold the 5 today? If it holds the 5 and you're looking for an entry point on a trade, that's your kind of your entry point right there. If it bounces off that 258 line towards the end of the day in a strong close, you can essentially take that as a trade, and that would be your standard buy point. I think it is my belief, and I could be wrong. I own a large, it is still my largest holding. It's been my largest holding since May. I think they will discuss their China revenue, which was not discussed last time. I mentioned this on the video. I think we get China revenue. I think it has a great quarter. Will Wall Street reward it? I don't know. I mean, there's going to be some earnings. I mean, there's people are up a tremendous amount of money on the stock. There is going to be some profit taking. I will personally position my shares will be hedged with covered calls, and I will play a little bit of upside with some open calls. I mean, with some calls on the long side, because I do want some exposure to that. But I'm going to hedge my large position. All right, so look for that today. Your standard buy point would be at the bounce off the 258. So if we get a little bit of a move off the 258 and you want to trade this for tomorrow and Monday in a short duration trade, that would be that. Okay. Dutch Bros, which I mentioned, I got in this about 2 weeks ago. It carved out a low for you guys. I'm sure you guys know. I bought this in my IRA a long time ago. I've traded it a couple times here and there. I think I got stopped out almost every time. As I always mention in these videos for you new viewers, the goal is never to take more than a 5 to a 6% loss. So I set my stops accordingly and I stick to the rules. Came down today to the 20 and it looked like it bounced on the open. So it did just that. Came exactly down to the 20, bounce. It's looking to get back up though through those averages. I mentioned on Tuesday I sold some calls, but I held my shares. Next week you have earnings. So here's the thing with Dutch Bros. Let's look at this from a fundamental standpoint. They are taking market share, and Starbucks, if I'm not mistakenly, had their earnings yesterday. I didn't read through all their stuff, but they basically attributed a bunch of lost sales. The Dutch Bros is taking a ton of their market share throughout the country, and they continue to open up more stores. That doesn't necessarily equate to success, because we see some of that with Kava, and that's not really as successful, but I think they're going to have a good quarter and they're going to announce that next week. It is my thesis that the stock will go up on earnings next week. So I do have this as a trade. I will figure out my trade tendency prior, but I do want to research more news on coffee tariffs. The little news I have seen from all of these correlated tariffs on beans has really not been that bad. So because of that, I still remain bullish. I think this is a great company taking market share. I remain in this trade. And if I were to give you a setup, I would say that from a technical standpoint, bouncing off the 20 this morning, um, that's strength. And that's something you might want to consider. So that is still on my actionable item list. All right, moving right along. Palantir has been, my favorite. I play this. I mentioned this on Tuesday. We're going to 200. Well, shit, I've been mentioning this for months. We're going to 200. We're going to 200. This is probably the best setup of the week right now. If you're looking for your best setup, this is it, in my humble opinion. Earnings again next week. risk management. But you know how I play this. I go PLTW. I like the weekly dividend every single week, and I like a little bit of risk on inversion. So PLTW from a technical standpoint looks phenomenal. This is an actionable item right now. Um, yeah, as I get closer to earnings next week, which I believe is next Tuesday. Ooh, I think it's Monday or Tuesday. So it is Monday, and I think it's Monday after the bell. I'm going to have to shift and move a certain way, though I still think this is a setup for today and tomorrow and potentially going into Monday. Okay. What else we got? Oh, United loser in the last 2 days. United had a decent earnings. You see, they beat revenue. They raised guidance. And this is what happens. But then Deutsche Bank came in and downgraded the stock to hold on valuation concerns. I don't know. Think that's crazy. So it came down here, a healthy down to the five. Sorry, to the 50, my apologies. And it bounced off the 50. I said that I've been on record. I mean, I've been buying this a while now, and I've traded quite a bit of calls. Fortunately, I've done well on the call side. I said that the dips are to be bought in a healthy manner. Now, your 50 is two. Your 50 is 342. The stock's at 345. How do you trade this? Your earnings are behind you. It is my opinion that the stock will now begin its upward trajectory. You got earnings out of the way. Still a low stock's trading at a low valuation compared to what it should be trading at. Yeah, you got some overhead supply issues in this area. We kind of saw that. The stock got to 381. This is where the beginning of sellers are lying. A lot of people that bought are underwater here. They're looking to sell when they break even. And sure enough, you see where my cursor is. It kind of looks like that correlated to that area. So I call that overhead supply. However, I think they're going to force some people out on that side. And I think it's going to clear out. And I think we're going to get a bounce. And I think we're going to go. So I think dips are to be bought in a healthy manner. If you lose this 50 and you lose in an above average volume, then dips are not to be bought. Then you would want to exit that trade. So, but for you people that are not in this trade, actually, this is a great entry point because you're trading over the 50 and you can evaluate your risk versus reward right here, right now. You can get into calls. I mean, I saw great opportunities on calls, with the 400 strike going out 6 to 8 months if you want to buy shares, but you're going to know if your play works or not. Because if you're buying here and the stock opens up and in the next couple of days and it violates that 50, that 342, it's a losing trade and you get out of it and you move on and you wait for your next entry point. So pretty straightforward. Yeah, still actionable in my opinion. I actually think there's a great entry point here, and I think I think your risk is evaluated and well defined in that circumstance and in that position. Going right along, core weave. So this is one I got right. I don't always get these right, but I got this one right. I sold 50% of my shares Tuesday because I didn't like what the CEO had to say. I sold half of them. And then yesterday before Jerome Powell, I had profits in the other half, and I am out of it now. So I'm conflicted on this. I think the company's a good company. However, I'm going to tell you, hearing the CEO pump the stock did not bode well for me. And so for that regard, I'm removing it off my watch list, and that will be my final due. Unless if something comes back around, I was more fortunate than anything that I sold the other half yesterday, and I actually did pretty well with it. So that's off my list. Open. Uh, so I've been on record talking about this. It did not break above. I got multiple text messages from friends, from family, and I told them you have to wait till it breaks above the downtrending line. Some of you fools rush in, man. I told you needed to see a close above the downtrending line to become uber bullish. It did not do that, and it got denied. And now it is below almost every average now, besides the 200, which whatever. So again, if you're looking for this as a trade, I'm going to say it again. I am invested into this. I do have it as a trade. I have a larger, or I should say a loose stop loss. It's not my normal 5-6%. In some cases 7. This is a much larger gap here. If you're looking for this as a trade, you got to get above the downtrending line. Once you get above the downtrending line, which is probably somewhere in this 840, 850 range, when you get above that and a close above that, that would be activated go time. Let the setup come. Let the trade confirm to you. If the trade's not confirmed, don't take the trade. Okay. I digress. Where was I? All right. So we've got some setups we talked about. The couple of things that I am watching is SanDisk. So SanDisk, unlike Oklo and Iris Energy, it has sales. It's actually a good company. I mentioned this, and I love today how it's down 3%. So this is something you guys can look at. This is incredible strength. Relative strength over the overall market is very strong. The 5, which I love to use the 5-day moving average in markets like this, is 188. I mean, the most opportune way to grab this is a bounce at the 5 and then up. It didn't give you that this morning. It opened up lower at 191 and has picked up $7. I'm not buying it yet, but this is something on my list, and I probably will buy this either today or tomorrow. The way I would tell you to trade this is I would love to see a close above that. So 192. So if it stays where it's at and it closes above that, there's a good possibility I'm taking this trade at the end of the day. This is a good stock, which I do think is actionable. Just put it on your watch list. Don't rush into it. See how the day goes. Okay. And finally, the other one I'm looking at is Bloom Energy. We are in desperate need of energy in this country for everything from AI and everything. Everybody talks AI, everybody talks about all of that, but you need energy. And without energy, you're going nowhere. Bloom Energy, you've seen the run since May, trading at $17. I was a fool. I was a putz. I sold this. I sold this here when I traded it at 35. I thought this was kind of like a blow. Foolishly, I thought that was a blow off top, and I was like, I got profits. I was almost up like 85, 90%. I sold it. Obviously, I missed the whole move, and there we go. And the shit happens. All right, the shit happens. You get back in the trade, you look for the setup. This is on my watch list. I have this here. This is one. They did an offering this morning. Anybody that knows about offerings knows that typically hurts the stock, but look, it handled the offering pretty good. My entry point here for confirmation would probably be here. So this is one I'm probably going to take as well between today or tomorrow. So you've got the trades laid out. You've got earnings today after the bell. You've got Amazon, which is going to direct the market in many ways. So you have to be aware of that. I gave you some setups. I think you've got some opportunities. Embrace the days that we have small pullbacks like this because they're constructive. What you want to do on days of pullbacks is you want to look for stocks bouncing off moving averages of areas of support and relative strength to the rest of the market. You want to buy leaders. You want to buy strength. You don't want to buy weakness, and you don't want to buy losers. So don't buy dips to buy dips. I say this shit till I'm blue in the face. You buy strength, you buy the breakout move, and that will typically bode well with you if you stick within your rules. All right, that's all I got for this week. If you guys enjoyed the video, please subscribe, and I will be back at it next week to give you an overview of the market and what we've got going on. So enjoy, take it easy, have a good weekend. All right, guys.